this thing has just been decimated, right? That I know you would just mention that down, sub 20. That's just awesome in terms of movement, right? But you compare it, historically, what's your gut on what's your average on that? Like 12, right?
Yeah.
Where does it normally come back down to? You feel pretty comfortable. Like, I'm going to load the boat at like 11, 12. I'm going to load. I mean, you're going to be buying those options, right? That's when you truly want to be owning options, is when it's down that cheap. Where's your point now? Like, you're looking at this at roughly 20, you're kind of seeing the market move up here a little bit.
Yep.
What's your point where is that level up now? Is that up from a 12 into in the mid-teens?
I think it is, just based on the backdrop of the world right now. I think it's probably well above 12. I'd probably even say probably 15, 16 area.
Kind of back at that
20.
low. Okay.
But I think if you go back too, guys, we've learned this over the years, that when the VIX is somewhere between 20 and 25, it's a very difficult place to be. And that's just something that, has been sort of the train of thought, I think, that a lot of us have had for a long time. Under 20s, you kind of turn into much more of a buyer. You start getting up towards 30 or above 30s, there's some opportunities to maybe, if you're playing it right, to get your palms out and sell those son of a guns, right? So, that's kind of, I would lift it up, though, based on political things that are going on in the world. Obviously, the Ukraine-Russian war still going on. Lord only knows what's going to happen with China, Korea, and all the rest of the different things that we've got. We've always got the Middle East that's got something going on. We have the crude side of things as well. So, and nat gas for a cold winter. There's a lot going on, and a lot that makes me say, when you get underneath 20, it starts to get a lot more interesting from the buy side.